It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast, talking your real estate news as we do 7 days a week right around Australia. It's interesting just some of the emails that we get because it does sort of represent the whole country. Of course, you can hear us on iHeartRadio, Spotify, Apple Podcasts and Amazon. The middle of our working week. It is a Wednesday, November the 20th. Would you believe? Just 35 days until Christmas. I was out at the weekend, just could not believe the mad dash with people scurrying around and buying. You know, sometimes people are looking but not buying, but there were plenty of items being carried. And it does make me wonder whether this Christmas is a super important one when it comes to spending over the Christmas New Year in relation to the economy. And with the lowering of interest rates next year, we don't want to see a blowout with expenditure that is going to drive the economy too much in one direction. And then we come back into the new year and we find that the RBA is talking about pressure on the economy for that very reason. And we'll be talking about that this coming weekend. So right now, let's take off to Victoria and catch up with Shane Martin from Loan Market in Geelong there. And Shane, as I say, 35 days until Christmas. I talk about the shops being busy, but you guys too are pretty busy with people still wanting to transact. So the lenders are busy. In turn, you guys very awake and alert.
Yes, no, it definitely does, Craig, and it's a scary thought to think we've only got 35 days until Christmas. In my field, we are definitely seeing a rush towards that Christmas period, i.e. a lot of people buying at the moment short settlements, so 30-day settlements. People, I think, are trying to get themselves and the kids into the family home before Santa arrives, which is exciting for everyone.
Yes, indeed. And there's a lot of auctions at the moment. As we say, the silly season is upon us. What an auction does is really put pressure on people who are not well prepared around getting their finances in order. Remember, there is no shortcuts when it comes to being ready. So we're going to, this morning, break down what you need to do for securing pre-approvals and understanding deposit bonds to leveraging equity effectively. So Shane, with first-time buyers new to this whole auction process, as we say, it can be extremely daunting. Some won't know whether or not they can secure pre-approval before attending an auction. So perhaps start right there for us this morning.
So to answer that question first, you can definitely get a pre-approval before auction, and one that I highly recommend. Pre-approval is going to get you in the strongest position to bid to your, borrowing capacity / purchasing capacity. One of the things that your listeners need to be aware of at auction is that it is an unconditional offer. So once you commit to the bid, you are unconditionally committing to that deposit and to that purchase. So being prepared beforehand, i.e. having a pre-approval in place, is paramount to having success on the day.
Actually, just on that note, unconditional, that would be something that comes up all the time, wouldn't it, with first-time buyers? And they go, oh, really? It's an unconditional offer I'm making.
Exactly, yeah. And if you are a first-home buyer, these are the things that catch out first-home buyers, is the difference between auction and bidding purchasing before auction. If you purchase before auction, you can have a lot of different clauses in there, i.e. your building and pest, your finance clause. I've seen feasibility clauses in there. But at auction, you are saying, I'm taking this house as it sits for the price that I'm bidding at right now.
Now, somebody's wanting to get this pre-approval from the lender through you guys or any mortgage broker. Some people will ask, how long is that pre-approval valid for?
Yeah, so I would say a majority of lenders' pre-approvals last for 90 days. At that 90 days, some lenders may request a full application where others will just let you extend it for a further 90 days with some updated pay slips. But yeah, rule of thumb, the pre-approval is going to last you 90 days. From there, it's always best to touch base with your mortgage broker again and sort of just confirm that everything's good to go, particularly if you're going to auction.
And it's fair to say, okay, the norm might be 3 months, but if you're somebody that has a couple of properties, you've been in the game for some time, you can definitely extend that out. Just depends on your financial situation. So there would be cases, wouldn't there, much longer than 3 months?
Yeah, there would be where you're extending it. But one of the things you want to be conscious of, particularly if you do have multiple properties or other lending facilities open, is that the pre-approval actually puts a credit hit on your file. That's fine as long as you're not using it multiple times. So essentially, once you hit 3 credit inquiries for a year, even if you're making all your repayments and nothing adverse has happened, it'll start to have a negative trend on your credit file. So it's best that if you've done one, then extended it. I say, make sure you're speaking to a good broker who understands your finances and the policy and work through it from there. I wouldn't just keep extending someone's pre-approval for a year and a half sort of thing.
Okay, and back to those auctions, perhaps just explain once again for the first home buyers, what happens if you can't provide the full 20% deposit at auction?
Yeah, so this is a really important one for your listeners to understand is that if you don't have 20% deposit ready at auction, then you need to be negotiating with the vendor before you start to bid. Essentially, the terms will be set out for the auction, and if you need to alter them in any way, you need to get approval from the vendor before you bid. Otherwise, if you're bidding without having that conversation beforehand, you're essentially committing to that 20% deposit.
Yeah, okay. So we are talking to Shane there in Geelong. We're talking about the auction process and how to be, I guess, financially fit heading into an auction. We are back after this.
Every week, real estate transactions take place as the market shifts month by month. And every day, we keep you better informed and updated on the Real Estate Podcast. It's time to go back to the Real Estate Vault for this week's property comment.
Although mortgages are going up, it's on a landscape where we actually have a lot of other inflationary pressures. So we're seeing power go up, we're seeing petrol go up. As we all know, the legendary lettuce has gone up. So we have all of these other pressures or price pressures around us. And the last thing people needed then was to also have that interest rate rise. When they were approved for their loan, the bank estimated that they could afford that interest rate rise.
Decode the property market with insider knowledge and insights to better navigate your real estate journey on the Real Estate Podcast.
And it is a Real Estate Wednesday right around Australia. If you are new to auctions and you're buying your first property, we are talking to Shane there in Geelong, getting some advice, some mortgage broker advice just to make the whole process a little bit more simplistic. And Shane, for a standard property purchase, is it possible to negotiate, some will ask, the deposit amount and other terms?
Yeah, definitely. And great question. And this is one that comes up often with clients. You can negotiate every aspect of that purchase. Anything from the settlement date as far as being 30 days, 40 days, 50 days, 60 days. I had a client recently sell their property with a 108-day settlement on there. The deposit can be negotiated. So sometimes people don't have access to 10% deposit, 5% deposit, but they've got a lot of equity. So we can use something that's called a deposit bond. And for the lack of a better term, it's like a pinky promise that the client makes to the deposit bond firm that they're good for the funds on the day of settlement. So then that firm puts up the deposit on behalf of the client. It obviously isn't a free exercise, but it's also not a crazy expensive one. You can generally organise a deposit bond for anywhere from, say, $800 to $1,600, which allows you to not have to draw out equity for the 30, 60/90 days that you're waiting to settle. It can be a really good exercise.
All right, and just back to these conditions within a contract. What is the market actually doing at the moment? In other words, can the buyer put in this market, particularly where you are, conditions, or are some people just automatically saying, well, the market is just too hot at the moment, I probably can't put the conditions? And that's always a mistake because you need to get some good guidance around that.
Yeah, exactly. And that's what I say. The conditions are there to protect the buyer. So I do a lot in the Geelong market down here and on the Surf Coast, and there's some older properties. So one of the ones you want to have there is a building and pest inspection, a finance clause. We generally like to have that in there depending on the structure of the deal. And again, these things can, if it's a make or break part of the offer, speak to your mortgage broker and see how confident they are in the finances. There's a few different ways that you can structure these things, but ultimately, if it's a property that you love, you can work towards the right outcome. But you don't want to be putting yourself in a position where you've bought a property that needs multiple thousands of dollars worth of work on it because you didn't get a building and pest inspection.
So perhaps just also step over what exactly a finance clause entails and how that works in terms of the contract.
Yeah, sure. So the finance clause is there to protect essentially the deposit of the buyer. There's a few different ways that we've been able to use this to our advantage recently. 2 months ago, I had a property that was going to auction a week away from the coming Saturday. So my client made an offer to the vendor with a finance clause that would end before that auction day. So essentially the vendor selling that property was in a win-win situation where they had the option to sell the property beforehand and have it unconditional. And then if that didn't come through, they could still hold the auction on the Saturday. So, but getting back to the finance clause, that is in there to protect the buyer's deposit. So without that, if you commit to a property with a 5% deposit without the finance clause and then can't get finance, you would be in a position where you would lose that deposit. Where with the finance clause in there, that's essentially saying, hey, I'm committing to buying this property, assuming that everything goes fine with the valuation and that I can get an unconditional approval from the lender. And if those things don't happen, then you get your full deposit back.
All right. Well, good stuff there, Shane. 35 days till Christmas. You'll be looking forward to knocking off next month, eh? Getting a bit of a break under your belt.
That I am, mate. That I am. The elves are working hard at our house, starting to get things ready for Christmas and the kids. And then, we sneak away every New Year's down to Port Fairy. So, definitely looking forward to that.
All right. Well, enjoy your Christmas coming up and the break and the new year. And once again, thanks for coming on to the Real Estate Breakfast, just sort of going through some of those steps around auction and contracts and approval, etc., etc.
No worries, Craig. Thanks for having me and have a great Christmas.
We dive deep into topics like buying, selling, investing, and maximising your property's value. From mortgage advice to the latest property data, your real estate journey starts here.
The unit market there in Brisbane, what is going on? Because it continues to outperform and outpace the housing market.
It's an interesting trend. The unit market has significantly outperformed the house market. In the last 12 months alone, the unit market has increased 18.8% compared to the house market, which has increased 11.9%.
And investors, of course, they're driving things up, making the supply even tighter, more frustrating for those first-time buyers.
Yeah, absolutely. Investors are typically competing with a lot of those first home buyers because a lot of investors are shopping at a similar price point. And yet here in Brisbane, we still have listing volumes that are down around 25% on our long-term averages.
We connect you to the best real estate information across Australia. The Real Estate Podcast.